Good morning. It's Market Day Report. Welcome to a Thursday. Weekly export sales numbers are out. I'll just go ahead and give you the headline, disappointing. All right, we'll break those down in just a moment. Let's go to the corn market. In the overnight session, what did we see? December contract, half penny higher at $4.55 a bushel. This is a market, though, is traded and closed lower 4 consecutive sessions. Over to soybeans. And the trade yesterday was higher for beans. We were lower for meal, higher for oil. And beans overnight, 2 pennies higher, 10.29.5. To the wheat market, Chicago and Minnesota, Minneapolis, which is spring wheat, both of those have settled lower on the new crop contracts for 3 consecutive sessions. July wheat overnight, 543.5. Since we mentioned Minneapolis, and I'm spitting that out, December overnight at 639.75, down 1.5 pennies. But Kansas City has been lower 4 consecutive sessions. July at 546.75, down 3.5. Finally, cotton market, it's actually been higher 5 of the last 6. Overnight lower, 69.93 off 4. All right, mentioned weekly export sales. President of Midwest Market Solutions is Brian Hoops. Brian, disappointing? Is that accurate?
I think it's a fair assessment. It's not real bearish by any means, but it is a little bit of a disappointment. So we're getting into the end of the marketing year for this wheat year, and trade was really rolling old crop into the new crop category. So we had a net reduction of about 5.3 million bushels of old crop wheat moved into new crop wheat, and that was 13.7. So even when you look at the net number, about 8.5 million bushels, still not great, and disappointment, as you mentioned. Soybeans at 10.4 million bushels, a disappointment, I think, not great, not a disaster either. And corn was decent at 45.4, but again, not where we have been recently. We're starting to see a little bit of a slowdown, and that's pretty typical during this time of year where South American supplies overtake us. Plus, we're into this tariff cycle. In fact, since President Trump has paused the 90-day pause on the tariffs on these countries, we're day 15 into that. So we're making we're kind of chewing our way into some of these days, and we don't have any trade agreements yet. That may be slightly disappointing for the market so far, but no private export sale announcements once again. Rain overnight in parts of dry areas of western Kansas. That wheat market's going to continue to struggle, and as that market struggles, it's probably going to limit the upside for the corn market. A lot of crop is getting planted this week, and we could have a continued pullback into the end of April. Maybe we see an update today just to break that 4-day trend that you mentioned of lower prices. But overall, it looks like the crop's being seeded rather quickly, and not really any reason to take off and rally at this time.
Hey, Brian, I did find one positive note from that weekly export sales report. It's one we don't trade on the board, but sorghum, 21,400 metric tons sold, which is an 86% week-over-week increase, 32% increase over the 4-week average. Actual shipments just under 34,000, which is up 97% from our 4-week average, but only one buyer, and that's Mexico. So there's one bright spot in that report. Let's come back in a moment. We'll see if we can find something bright and cheerful to talk about when it comes to proteins. Market Day Report continues in a moment. All right, live cattle futures, let's jump in. Buck 32 higher on the front month yesterday, settling at 212.70 near the high of the day. Actually was off about 90 cents from the high, but 213 was the high for yesterday. Could we move it higher today? 208.10 on the June, up $1.82. To the feeder market, and feeders moving higher yesterday, up $1.42 on the front month at 288.35. Hog trade, Hogs on Wednesday in mixed territory. May contract in June, both lower. July up a couple of pennies. Noticeably, though, June and July, after hitting 101 per hundredweight, backing off and holding on to the triple digit into the close. All right, Brian Hoops is with Midwest Market Solutions. Thoughts on the proteins?
So yeah, our exports numbers, let's talk pork first of all. It was a marking near low, and we've seen a big jump 2 weeks ago, and that was likely to get ahead of the tariffs. And now we're starting to see those tariffs really start to affect a lot of the countries, particularly China, as they were one of our biggest buyers of pork. So sales were only 5.8 million tons. The beef sales were not much better, 10.3 million tons, a disappointment number there. And we're a little bit more dependent upon our pork exports than what we are for beef. Now, the cattle market last week, the futures led the cash market higher. And this week, it seems to be doing the same thing. Futures are rallying, and the cash markets want to grudgingly turn back higher. The Packers, I don't think, really want to pay up for the cash markets this week, but they may be forced to. Their margins are really slipping in here because the slowdown in the slaughter pace. They've only cut kills by about 8,000 head this week so far. They may have to cut it even more, and that means they may buy less cattle. But the margin's about $143 in the red right now. A week ago, it was in the $60 to $70 in the red range, and that's when they were able to pay several dollars higher. I don't look for them to do that again. Maybe $1 to $2 trade, or they just kind of shut their doors and say we'll wait until another week goes by and so we can get things cheaper. But certainly the futures market making a case that the cash needs to come higher, but the cutout values, the slaughter pace, just suggesting that we're not going to see a sustainable, stronger, higher cash market at this time.
Hey, Brian, when we again talk exports, we usually talk the dollar in that conversation. I find it interesting, though, the dollar has actually been moving higher and up 3 out of the last 4 sessions. We're lower this morning. Thoughts there?
Yeah, the dollar started to turn back higher when the stock market did and when gold started to collapse. And it was all predicated on President Trump talking that we may have an agreement, or he's not going to hold the Chinese to the agreement of the 145 tariffs. It's going to be significantly less. Since then, the dollar has rallied because, it's bearish for the dollar to have these tariffs in place. And the dollar's starting to weaken back again now that China has said overnight, we're not talking to the United States. There's no agreement in place and we're not very close. And we started to see a little weakness yesterday in the stock market, the dollar as well, later in the day, because China had said that, and our U.S. Secretary had said it could be 2 to 3 years before we have an agreement with China. So things are not real close to coming to an end at this point in time. That probably is going to keep some weakness in front of the U.S. dollar.
Yeah, spot on there, Brian. Thanks for popping by. Brian Hoops is with Midwest Market Solutions.